righty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Hope everybody's doing great. Hold on one second. Just 1 second. Okay, found it. Sorry. Sorry about that, guys. So I'm running a little bit late. I'm glad you guys are here on time. But I have to just pull up the bias chart. It's funny. I wish I wish I could say that. I try to explain to people like what it's like for me when I get up in the morning. Like, I get up and I roll out of bed. You get up, you roll out of bed, you stretch, wiggle your toes, go walk a little bit. I literally, when I get out of bed at like 3 whatever o'clock in the morning is, I roll out of bed, I go straight to the coffee maker, which my coffee is already pre-made because I had it ready the night before. Grab my cup of coffee, I sit in front of my computer, I'm wiping sleep out of my eyes for the first 15 minutes. I'm trying to kind of listen to a couple of things to get caught up on the market environment. I listen to a few audio files, I read a couple of things, and then it's like nonstop from there. I don't really breathe for the next like 3 or 4 hours. So if you guys are sitting here going like, wow, Blake, you're running late or whatever, I am, but it's probably because I had to run to the restroom or had to go get more coffee or something like that, in between things. But it's like really just kind of a crazy, as soon as I roll out of bed, it's just crazy for the first few hours. It's nonstop. Things do slow down obviously throughout the day, but as the markets, and then if you want to add like craziness on top of that, then if the market's going berserko, like if the market's really moving, and then I have updates are flying around trying to get them pushed out through ForexAnalytix, through all the technical analysis here, and then updating charts in the chat room. And because if you're in the chat room, and you guys you could probably see this, like I'll just show you. This is, if you're not in the chat room, you won't know this. But when I pop in here, the first thing, once I sit down for like, it's probably like takes me about 30 to 45 minutes after I get up. I'm still trying to go back to earlier this morning. You can see how I start posting charts, right? So I start posting charts. These are the same charts that you're going to get on updates in the ForexAnalytix app. So if you see this like analysis right here on the sterling, that's the same analysis that you're going to get. Whoops, not right there. That you're going to get right here, right? So the same thing that you're reading here and the same chart you're seeing here is the same thing you're going to read right here. So I'm showing you that because like when I sit down and this way, people that have the that are in the chat rooms, they don't have to go back to the app. And because I used to do that, I used to just post it in the app, and then I'd be like, well, you're in your chat room, you've got the app, go ahead and take a look at that. But just go over to the app. But why do that? It's like you guys don't have to go in multiple areas, right? So that's what I try to do there. And then obviously I'm looking through all the charts, trying to find, all the instruments, trying to find something that, sticks out more so than others, or, some sort of setup. But then from there, obviously, if you're in the chat room, people might comment on, something that I saw, or maybe, reference about some of the trades that I'm doing. One of the other things I want to clarify with you guys that are using the just you're on the light version and you don't have like the full access premium version, like you're going to see like these patterns in play, right? When you see a pattern in play, and I can speak for myself, not for anybody else on the team, when I do a pattern in play, it's a pattern, it's a setup, right? There is I would say if I threw a number at it, there's 80% chance that I took that trade. Sometimes I don't because I have to identify a pattern that's setting up, but I already have exposure. Like, for example, let me give you an example here. Okay, let's go back to here. This is our chat room, right? Let me just put that right here. So here, let's go to the trades room. So you can see, the trades room. I sold Kiwi. I did. I'm short Kiwi, right? But let's say I was already short here I'm long dollar max, but let's say I shorted the euro because we've been talking about the euro at 118.50, right? And I was already short in the trades room, because that's my positioning. If I put in a pattern in play, I might not take that trade because I've already got too many dollar longs, for example. You know what I mean? So, a pattern is just identifying a pattern. Whether I take it or not, like I said, it's probably about 80% chance that I'm going to take it. But it's been pretty representative of what I've been doing pretty closely. What I've been doing in my live trading accounts recently. Like I traded Ethereum yesterday and the day before. I was long. I took some losses recently, and I did this last couple of weeks. Previous to that, I had it was rock star performance for me personally. I think my August was like one of the best. July and August were one of the best summers I've had in a long time. Anyway, so I think it's pretty representative of what I've recently been doing, even though I've probably only traded about 80% of those. But yeah, you can see most of my trades in the trades room, right? So anyway, hold on really quick. So anyway, just want to kind of give you guys an update on that. All right. Let's go into the charts. Let's go into the markets. And some comments. Alexander, if you need a personal assistant, let me know. Yeah, right. Brand says, yeah, it saves scrolling and scrolling for sure. Yeah, for sure. Yeah, we are getting very close to that 74-cent resistance. Brand said we are. As a matter of fact, we can go ahead and hit that Aussie dollar first. Look at crude oil. Why is crude ripping right now? I guess because stocks are all-time highs. I guess that's it. But yeah, Aussie's getting right up to really key. Let's get specific, because I know it's not actually 74 cents. It's a little higher than that. What's the high here? 74.17. So, oh wait, hold on. 74, no, 74.26, 74.22. So 74.26. So I'm going to write down 74.25, big resistance. I'll write down both because I do think the big figure is going to offer us some resistance here, but 74.25, really key. And remember, I've taken us off bearish for a while now. Support. Okay, now this is, I'm going to start drawing this. Doesn't mean anything yet, but You can see we're developing like a, a wedge, if you will. That also means we can, blast up here, or, we can go like this. Right. These are all possibilities, but that's what I wanted to bring to your attention. Okay. Let's delete that. Okay. So that means support right now is this horizontal support right here. So the trend line support is coming in at 73.50. Let's go to the euro. One, obviously we're at resistance here. Remember from yesterday, we wrote down resistance at 1845, either 1845 or 1850. I can't remember what we wrote. 1845, then 119. Well, I mean, you can see we're just knocking our head up against it. So 118, I'm going to write down 118, basically 118.60 and 119. Support is 118. Right there. Right. This should not break now. Not for the bulls anyway. If that breaks, then bulls got some problems. Divergent relative strength. So I think there's a chance, especially non-farm payroll tomorrow, there's a chance that the euro, pushes right back down. Benedict in the chat room was like, yeah, just hit one more high and then, back down. I think that's probably realistic to believe ahead of the jobs report, knowing that, we have the jobs report tomorrow. I don't think positioning right now is long dollar enough ahead of the jobs report to get that happen, to see that happen. But I don't know. It may. It may. So support, we're just going to write down at 118. So resistance for the sterling is 138. Oops, I'm sorry. Yeah, 138. We're here. I mean, obviously, we have to think about if we do break, we go to 138 40 pretty quick, right? So I'm going to write that down just in case. You never know. Euro starts tripping stops, and next thing you know, you got the sterling tripping stops right above that too, right? Support is at 137.30 right now. Whoops. All right, Kiwi. So remember, the 200-day moving average right now is here at 71.13. I'll just write it at 71.15 just in case, because we're taking out some of the 71 level right now. So 71.15. Then the really, really key trend line here is at 71. I'm going to call it 71.40. Okay, we should not get above that. I hope not. I'll get stopped out. We have had this on bullish. That's why I'm taking small position. So I think if we close above 71 today, or 71 today, we have to actually go into, we have to put it at bullish, or we close above the 200-day moving average, but it's hard to do that right at this moment. So support is at 70.57. I would say is this previous support, that's going to act as that previous resistance, I'm sorry, is going to act as current support. All right. Dollar Canadian. So pretty big support here at 125.70. Resistance, well, you know, resistance is going to be here at 126.50, then 127. So $92.91 for dollar Swiss. Nothing's changed. US dollar Norwegian krona, big rejection here at 8. We have to get above 873 to turn things as a false breakdown. But as of right now, 862, 873. $862, yeah. 873. That's, oops. That is, damn it. Sorry for the typos. That is important. We need to hold that to keep the bearish designation. The only currency pair right now with the designation, right? Because it is bearish. I mean, it is. Double top. Dollar max. Now, I picked up some dollar max yesterday at 20 as my average. The double top really still has to get all the way down to 1991 to complete, or we can actually write it as 1990 because we might get an overshoot with stock so strong. I still think we're range bound. Resistance intraday is at 2002. Dollar yen. Look at that. I mean, we couldn't be more in the middle of a triangle. Symmetrical. Look at the price action for the last 12 hours or 16 hours. That's silly, right? 110.35, 109.70. dollar index. Channel support comes in right here at the 78% retracement, which is 92.80. This is one of the other reasons why I think that, you know, we could see some continued dollar weakness, because we might just plunge through this like this, you know, dude. You know what I mean? Ahead of the jobs report. That's possible. That means that the euro could punch up to, you know, 119 really quick. That's why I don't want to write off like the euro or, you know, the Aussie or the Kiwi. They have the potential still. Because channel support comes in at 92, let's call it 92.20. Yesterday it might have been 92.15. Let me see what we have written down yesterday. 92.15, yeah. So today is 92.20 because it is channel support, because it's an ascending trend line, so it's going to adjust a little bit, right? Resistance is 92.80. And I thought we'd have this inverted head and shoulder pattern from yesterday, but that didn't come to fruition. It did not, because of the data. Okay. I just skipped by the S&P. Let's go to the S&P really quick. Oh, look, all-time highs, almost. That could take us all the way up to 45.85. It's increasing every day. $4,500, 44.65. I'll just write down those for now because I don't think we're going to get down there. We might get to 4,500, but I doubt it. Just continue to stretch our legs. Anybody who gets short just gets it shoved right back into their face every time. So Bitcoin, we're going to say 50,500, but the 618 comes in at 51. I'm going to make sure those numbers are right on. I don't think that worked. I think I came off by a day. Hold on. Sorry, guys. So basically, you know what? I'm going to write down 51K because that's roughly big resistance, right? 51,000. And then I'm going to put an asterisk there. It's bullish. Support, let's just write this down for now. 46.3. Don't even have to think about it while it's above 46,300. Gold and silver. You know, it's interesting. Silver rolls over and it doesn't help the dollar at all, which is interesting. It's interesting to see these. And maybe I go back to the precious metals down, cryptocurrencies are higher, right? So I do think that resistance is at 2450, previous support, current resistance. Support is at 2370 for now. Let's write that down. 2370, resistance at 2450. I'm going to keep us in range. Gold struggling to get above the 618. So that's 1825 support at 1770. $18.25, $18.35. I think I wrote them down yesterday, but I'm just going to write it like that. Keep it in range for now. Okay, bias chart is finished. I'm going to pass it off to Steve and Stelios. You guys have a great day. I'm going to go rip my hair out. I'll be back. Talk to you guys later. I'll see you guys a little bit later. Bye-bye.
Thank you, Blake. Thank you.
Bye-bye, mate.
Steve, I feel completely useless because I have absolutely nothing to say ahead of tomorrow. I really don't. Yeah, I mean, yeah, we're grinding higher in equities. We're
What a
doing nothing
surprise,
in
eh?
FX. Yeah, nothing in FX. Yeah, I have nothing to say. I'm sorry. You know, yields are doing nothing. So, no,
Yeah,
over to questions or whatever. Yeah.
To open question box, etc. So now, as you said, Stelio, the theme, and Blake obviously said the same, the theme remains exactly the same ahead of the Fed, right? Exactly the same. Meaning we remain in this grind lower in the dollar and the obvious grind higher in equities. No surprise there. It's been, with small interruptions, it's been more or less the case for like, what is it, like 12, 13 years now.
Yeah.
It just get, the only difference is that it gets worse, you know, as time passes. So technically speaking, there haven't been any major developments. I mean, we've had some developments happening during the past couple of days as the breakout in the Aussie, in the Kiwi, as we mentioned. Here they are. Somebody also mentioned it here in the chat. Aussie getting very near 74 cents. Yes, which is the previous high. Actually, the previous high is a little bit higher, 74 to 74.30. Let's say this little zone is a zone of resistance. Now, what happens tomorrow with data? Blake already mentioned it. As I've said, in my opinion, the Fed is not going to be data sensitive, but the market still thinks that the Fed is data sensitive. So as long as the market functions under this pretense, it will keep responding to data. So clearly, what we get tomorrow is going to affect what happens with the dollar and what happens with equity markets. Now, can I guess what the data is going to be tomorrow so we can accordingly plan based on that? Obviously not, right? And even if I could, my guess wouldn't mean anything, and you shouldn't be trading on it. Even when I have some good intuition of what's going to happen because of some previous data or whatever, I still wouldn't necessarily even trade on it myself, right? Because this is not the way we should be functioning as traders. Suffice it to say that the market is positioned in a way that more dollar weakness and more equity market strength seems to be, a thing that can unfold very easily, right? Because we are already, technically speaking, comfortably on our way to new highs in equities, to lower levels in the dollar. Cable, for example, if we wanted to be talking about like somewhat technical important events, cable has now just reached the confluence more or less of the 50 DMA, the 200 DMA, this descending channel trend line resistance. So having to do with the cable, I don't know if it's going to break out today, likely not. But dollar negative reaction to tomorrow's data is going to lead to a very, very nice technical breakout in this case, with the next upside target being 140. And most likely, if we do break above this confluence of resistances we're talking about now, we're not just going to see 140, which is the previous high, and the 61.8 from the highs to the low of this corrected move, but we're probably going to see at least a retest of the previous highs at 142.50. So everything is well positioned for dollar weakness. Now the question is, are we going to get that straight ahead, or are we going to get some initial reaction from the data that's going to be equity negative and dollar positive? Now, even if that's the case, from what you can understand from the way I just said it, I don't believe that's going to be a sustained type of move, right? I think the sustained type of move that's still unfolding is the aforementioned one, and now having to do with other markets than the FX market. It is important that crude is currently testing the confluence of these resistances, the 50 DMA, and the most important, obvious, being this descending channel trend line resistance. So crude has now rallied to a significant technical level, a pivot area in essence, that defines the corrective move lower. We break above that, in my opinion. We've probably, in retrospect, we can turn back and say what we said back then. Back then, we said that this is a nice reversal from a very, very interesting confluence of supports, and there is a decent likelihood that this might mark the bottom. We break through this channel trend line resistance, and in my opinion, the chances that we've now seen the bottom of this corrective move increase even further substantially. The chances are now going to be overwhelmingly in favor of having seen the bottom of this corrective move lower. And in my opinion, the next move for crude is going to be 80 plus, right? And I think it's a very, very, very likely scenario. Clearly, the opposite type of reaction from the markets tomorrow might prolong this eventual breakout by keeping us within this corrective channel, but I think that's also going to be temporary. Now, clearly, if you notice the type of like 3-4 last candlesticks we've had in gold and somewhat in silver, market participants in these markets that are very, very sensitive to monetary policy decisions, right, are very, very skeptical in taking risk ahead of the data, and in essence ahead of the Fed, because the market believes that every time we get data, that immediately will affect how the Fed is going to react about it, and that and have a big influence to future monetary policy and the path forward. So monetary metals get immediately affected by it and react very, very frequently. React by producing spasms in essence in the market. We've seen very, very big moves following important data and or monetary policy decisions, right? So we get dollar negative data tomorrow. I think there is some pent-up demand that has been put on hold here, so I would expect the monetary metals to rally quite significantly. Oppositely, we know that reactions to the downside have been more prominent. So in any case, I think that unless the data really exactly as expected, we're going to see a decent reaction from gold and silver tomorrow. Now, gold is consolidating just above this channel. In the case of silver, silver is toying around with breaking through, but I doubt we're going to see a technical breakout ahead of the data tomorrow. I think that's going to happen post data, if it happens. Now, palladium confirmed a second rejection from the 2500 area. We've mentioned the importance of that area. Below that, you can remain bearish. And platinum also consolidating its recent losses, still within this descending channel, still displaying some RSI divergences though that need to be mentioned. Cryptocurrencies remain extremely well bid mostly. Actually, Bitcoin is trying to do some catching up to the Ethereum market today. So Bitcoin seems to finally be breaking higher, not having followed previously Ethereum higher, right? Ethereum had this like massive follow through. We said that once we break through the confluence of resistances at 33.70. We should see next 38.16, which is 78.6. Now, admittedly, I didn't necessarily expect that that's going to happen within the same day, but you know how the crypto markets are, right? They can produce like massive moves in very little time, and you know that's what happened here. Ethereum so far seems to be consolidating the massive gains it had yesterday. Nothing to see here. Clearly, it remains bullish above 33.70, with the next upside target being the all-time high at 4,400, 43.84, whatever the hell it is. Anything else? Stelios already mentioned that we haven't had any real big developments in yields, and that is very, very true. And I don't think we're going to have ahead of tomorrow's data any developments here, and hence, you know, no big moves in the case of the yen pairs we were talking about yesterday. An indecision candlestick yesterday, one today so far, the same the day before yesterday, the same the day before, 3 days ago, 3 pin bars in a row. We're working on a fourth one. Basically, this market is just has completely stalled, waiting for the next move from yields, most clearly, before we can get whatever we get, in this case. That's it. I don't have much else to say, so I'm going to be more than happy to look into whatever you want me to look at. Clearly, it's not that I can make up things when the markets are not really moving. There's so much you can say about them, right? I mean, instead of pretending that there are things to say, even when they're not, I just note whatever is really there to be said, and I'm also looking forward to days that we will have so many things to say that time is not going to be enough, because that's the type of market conditions we want as traders. But, frankly put, this is not what we currently have. And yeah, I know we can live with the hope that the next set of data, in this case, the ones that are coming tomorrow, are going to be the ones that are going to release the markets from the grip of inactivity. And
good luck with that.
Yeah, exactly. And non-existent volatility. But I'm very much afraid that unless we get some kind of a big outlier or whatever, we're going to get some type of volatility that's going to last for half a day, 1 day, 1.5 days, and then we're going to go back to, wait for it, looking for the next data set that's about to be released, and saying that the market is not moving because now it's waiting for X or Y or Z, and after that gets released, unless it's something completely out of the ordinary, we're going to be looking at the calendar and we're going to be looking for the next data that's going to be released a week after that, so on and so forth. So in general, I would want to be optimistic that currently, and as long as we're still more or less in the summer environment, I know September started yesterday, but you know how it is. I mean, the markets are still more or less in summer mood, right? So as long as we remain in summer mood and there is not something big that might disrupt the status quo, I expect that for at least a couple of more weeks we're going to be more or less in this boring market environment, hoping that once everybody's back at their desk, etc., we might get something moving for one reason or the other. Let me see. Let's start from Moderna. Still some kind of a corrective move unfolding here after the first leg lower, and my assumption still remains that this market is unlikely to have finished moving lower. That's what I think, mate. I think that we're currently seeing a counter trend corrective move to the rather violent turn lower, and my assumption is that this is going to end soon with another leg lower. I don't think this is a market that has corrected moving lower. I think there might be a substantial more downside before the market can rebalance, because it had literally gone completely vertical prior to that, right? ASAN, what the hell is this? Asana, is this the one? Amira, is this the one you're looking for, mate? Just to make sure. Okay, perfect. So look at this. I think this is a very bullish market for 2-3 different reasons. Haven't had a look at it before, but you know, there are some things that immediately catch my eye here, right? So look at this jump higher post earnings, right? While we're breaking through this corrective trend line in RSI. So unless this is a terminal type of event out of a triangle, which can be the case, but it's not the most likely scenario looking at the previous trend, I think that's a very bullish development. Now, if for some reason, right, this market drops back in here, I would turn very, very bearish. So if this proves to be like a one-day type of breakout from the triangle and an unsustainable type of move, I would immediately turn very, very bearish. But until that happens, I think you have every reason to be bullish here. Looking for higher levels now. Higher where? I have no idea. I have no idea because this is a new stock, as you see. There is no prior price action nowhere in the vicinity of the levels we're currently at. The market has really gone vertical, and pullbacks have been extremely minor lately. So, you know, drawing fib extensions in order for them to be useful, I will have to start looking at some extension levels like 261.8% extension, which, you know, I don't want to bullshit you, you know, being frank and using the harsh word, and tell you that these are very relevant fib extensions. So I'm just going to tell you that, you know, the market has the potential of going much higher if we break through here, but being a new stock and all the rest that I explained, you know, giving you upside targets is going to be foolish, right? As a general rule, very nice rounded levels like 100, for example, can be interesting upside targets, right? Yeah, that's all I have to say about it. I used the Asana software for 1 year quite. Oh, that's why I know this game, Asana. Yes, you're right. They make software, but what kind of software do they make? Because I see it. Since I'm into computers, let me have a look and tell you if I have a personal opinion. They've made a Monday. Yeah, I know Monday. As a product, it's rather decent. Yeah, I know them. Okay, interesting. Yeah, tech company that went berserk on the COVID crisis. I used Asana software for 1 year. It was quite good. Okay. Zim. Which one is it? Is it this one? The NYSE listed one? Yeah, probably it is because we've seen it before. So I'm assuming you asked for it before. So probably you confirmed back then that that's the correct one. So here it is. We haven't had a look at it for quite some time, but as you see, it played out perfectly. No, we actually seen it earlier because I see this trend line support rebounded perfectly from this trend line support, pushing all-time highs. As long as we trade above this trend line support, clearly remained bullish. Next upside targets 54, 30, and 60, right? RSI breaking to overbought territory and higher high shows that there is no divergence yet. So this market remains well bid. I don't really see any warning signs. We recently had a somewhat decent pullback, right? So everything here tells me that there is a decent chance that there is, you know, more upside currently coming without some imminent danger for a big pullback or whatever. Laura is asking for USD BRL USD actually, but if you don't mind, I'm going to have a look at USD BRL. I haven't had a look at it. Look for how long ago, right? Predicted back then that we're going to have another move lower from there. We did, but that move never reached a quality target. And there is a very simple explanation about why. And that's why I keep insisting about the complexity of predicting corrective moves in advance. Because what would end up being the simplest form of a corrective move lower, an A, B, C, right, proved to be quite a massive triangle. If you notice, we never made it to new lows to complete an ABC simply because we're still in an unfolding large corrective move. So instead of getting that, what we've got so far is this, right? There you go. Still in a massive triangle, which means that we are absolutely without a trend, right? The trend is horizontal. We have no trend. We are consolidating, correcting in time rather in price. That technically would imply that the chances are in favor of an eventual break to the upside. I mean, you know, they're somewhat higher for a break high, right? But trading this currently seems to be an exercise in vain, right? I don't think you should be doing anything with USD BRL at the moment. It's clearly a market that's range bound. And as such, unless of course, you have completely different time frames as a trader. And then yes, if we revert back to 1 hour, 2 hour, 30-minute, maximum 4-hour charts, there will be shorter term trends we can talk about, but there is definitely not one. If we're talking about medium to long-term trading, there is absolutely none here. We've been consolidating in this triangle for more than a year. Currently, it's almost 1.5 years that we've been here, right? So in my opinion, you should remain patient before this market, finds a direction once again, which it doesn't currently have. Anything else, guys, girls? And EWZ. Sorry, I didn't see that, Laura. You also asked about EWZ. I'm assuming that EWZ, that's okay. An ETF for Brazilian shares, which looks very, very bearish. Yeah, it does. It does. Financial crisis, massive sell-off. The problem being we never recovered. So the rebound was corrective. And then just this continuous grind lower, and every rebound so far seems to maintain corrective characteristics. This was a textbook trade here, textbook, right? Impulsive move lower. And I have to tell you that this doesn't look good either. This looks to me like another corrective rebound. So I would be very, very, very careful being long Brazilian stocks. Very, very careful. we break through this trend line support, I think we're going to see another big leg lower. My pleasure, Laura. EL. Stelo there, is that the one? Yeah, we've had a look at it before. So look at this massive uptrend. We haven't had a look at it for quite some time as it seems. Look at this massive uptrend that just continues unabated, right? Non-stop. Having said that, we've now spent a lot of time producing RSI divergences, and this looks to me unsustainable. So bottom line, I would not be chasing that up here. No way. I think it's very, very dangerous. And I think once this snaps, we're going to see a very decent corrective move lower. So don't go chasing this. At some point it breaks through that. Good luck. It's going to be very painful. And last but not least, TMO. Okay. Haven't had a look at this before, but I can tell you that it looks decent. Had a nice corrective move over time, which is generally a bullish type of development, right? Correcting in time rather than price shows strength. Now, of course, it's a little bit late for us to be discussing about upside potential simply because this market has already broken out for quite some time. It has already fulfilled the first target and it's on its way to the next one, which is at 594, but it has already moved significantly for me to tell you what I've said many, many times before. Yeah, it looks nice and bullish and everything else, but you know, how can you chase this up here, right? There is no risk reward for you to chase this up here. Now, if you're invested in this in your long, I see no reason why you would want to get rid of it. It still performs well. Technically speaking, I see no big worrying signs. Yeah, there is some RSI divergence, but I see no other big worrying signs because we recently had this big corrective move, big in time, not in price, as I explained before. So that might be enough fuel to see this easily complete the second target as well at 594, right? So if I was invested in this, I would still be holding and just be doing some, trade management, like trailing my stop loss, right? Putting it in my profit and following it higher as the stock gains in value, but I wouldn't be taking it off, right? So if you're asking because you are in it, just keep it and, de-risk it. Now, of course, if at some point you want to take some profits as well, I see no argument against that either. But as I said, so far so good. Okay, guys and gals, as always, I'll be back here tomorrow, same time, same platform. And I hope you have a wonderful rest of the day and see you then. Bye-bye.
Steve, bye-bye.
Bye-bye, Stel.